Nigerians traded at least 316.9 billion naira in Bitcoin in 2021, despite the Central Bank of Nigeria's restrictions on cryptocurrency transactions and the nation's banking system. Last February, the CBN directed banks in the nation to desist from transacting in and with entities dealing in cryptocurrencies. It also mandated banks to close the accounts of persons or entities involved in cryptocurrency transactions. To make sense of this development, Gospel Obele, CEO, Street Economics, joins me via Zoom interview. Hello, Gospel. Thanks very much for joining us.
Yes, good afternoon. Thank you for having me.
Yeah. Report has it that Nigerians traded at least 316.9 billion naira in Bitcoin in 2021. This was despite the federal government's restrictions on crypto trading. How do you explain this craze over cryptocurrency by Nigerians?
So first off is just to further solidify that there's a huge digital savvy market, first and foremost. Secondly, is also to identify that there is a huge market for risk hedging. When it comes to the naira is devaluating, the naira is falling and failing, what other options can we do business in? Thirdly, there is also a huge market for, in terms of alternative financing, to business services and products and all of that within and across borders. So take, for instance, an SME who does a lot of importation has to go through the hard work of, sourcing for foreign exchange. So the crypto serves as a very good alternative, to financing, for import financing and the like. So it cuts across those heavy three blocks, and then plus and minus unnecessary capital inflows as well. But the bane of the conversation is that there is a growing and thriving digital market. There's a growing and thriving market for digital currencies. So that conversation is a potential force for good if correctly deployed by the apex institution. I'm not talking about through e-Naira now, but in terms of proper regulations, proper innovation, proper onboarding, and all of that. If all of those dynamics are done correctly, it's a great potential for helping to advance Nigeria as a frontier market when it comes to digital currencies, and all of those dynamics. But what we're seeing is that the body language of a central bank has been trying to oppose or seeking to forcefully regulate, or through a form of coercion and all that. And the trick is this: you cannot properly or correctly regulate what you do not understand. And I was seeing over time that the central bank has, instead of seeking to understand what this innovation is about, the pros and cons of this innovation and how to best deploy and manage, the central bank has started to roll out policies that has, sort of like seeking to fight against the development of this crypto initiative. But then again, the youths are unstoppable, and that market thrives heavily on the digital economy, which you cannot really tame, in terms of just policy and all that. So that's where we find ourselves in, and it has a huge potential for monetary and financial systems development if deployed correctly.
Now, since crypto trading is persistently gaining acceptance, that's widespread acceptance and popularity, why doesn't the federal government deem it fit or wise to leverage on its popularity and stability and improve our economy?
Yes, I mean, that's a very, very intense and interesting question at the same time. And that's primarily because, first and foremost, you want to look at what's the political ideology around people and systems productivity. And a government who doesn't thrive, who doesn't have a positive ideology around how systems can evolve, be better productive, and best use of technology, may not be able to maximize opportunities for innovation as well. So that's a major challenge that we found here. the government of the day, not just of the day, but even the political economy, on a landslide, do not seek to encourage more productivity. So any innovative practice, especially in the best use of technology or the digital space, is the first point of the first language is to kick out or to fight against than to enable, encourage, and scale. So these are the critical challenges and issues that we are facing. And we're also seeing that in how, policies around managing social media, building tech hubs, scaling technological startups in non-oil. And we've also seen how policies around that space have been rolled out and has been used as a lot of times disenabling weapons, and not really as though there's a plan to enable and scale and all that. So we don't have that ideology or the culture to embrace innovation, understand innovation, and maximize the opportunity that these innovation presents to us to scale potentials for growth and development. So that's a major core of what we've seen in the crypto space, and in terms of why the government seems to be fighting it. We are not an open, innovative-driven market in the first place. So we don't expect anything on the positive from the government of the day.
Now, recently, the Central Bank of Nigeria imposed a 1.31 billion naira dollar penalty on 6 banks for facilitating transactions in crypto. Now, are you satisfied with this penalty? Is it not heavy enough, or is it less? Or perhaps, would you think it shouldn't have been in the first place?
Well, I mean, quite honestly, it's just like a case of, when a policy is being rolled out of poor understanding, when policies are rolled out in rush, when policies are rolled out to counter, against productivity, what you find is that because growth is happening due to the resilient nature of what that policy is seeking to fight against, you will now have further situations where, the policy itself will create leakages in the sense. And in the course of doing that, the central bank can only, or the apex institution in this context now, can only seek to introduce further policies to further suppress, or, just to prove a point or another, or to seek to and all of finding banks and financial institutions who seemingly went against the February policy. And to a very large extent, it shows that we are not still dealing with the right problems, because a lot of times, on one end, it may not be the bank's fault, because the central bank does not even have correct information as to what's the weight of accurate transactions, crypto transactions that runs through the financial monetary market. That's number one. Secondly, the commercial banks don't have enough data or are not correctly tracking to know where transactions are coming from. I mean, people who get into all these cryptos and even forex-related investments and engagements, they have a way of hiding transactions behind in terms of the description of those transactions. Now, they can label a transaction in a particular way. There are many ways people are beginning to think of how to outsmart, descriptions and transactions through the conventional bank pipeline. And because the banks do not have a form of intelligence to identify which transaction is crypto-based, or probably they're just paying a lip service towards that, that in its entirety constitutes, some form of that further renders the central bank's policy useless. So in the first case, in my own opinion, would be, first of all, we need to go back to the drawing board to seek to understand how much of fines can we keep throwing out of the window in the name of commercial institutions who went against the central bank policy. All right, so I think we need to look for a much more intelligent and sustainable approach to dealing with the problem at hand, which is a lack of understanding of what's going on, a lack of ability to identify the leakages that exist, and how well we can collaborate to correct these dynamics in the first place, than seeking to use institutional power to enforce policies that at the end of the day would not still scale any form of positive change or sustainable development when it comes to innovation.
Well, thank you very much, Gospel, for your time and thoughts on the show.
Thank you for having me as well.